Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone had a great weekend and you are ready for not just a new month. We've got an FOMC meeting on Wednesday. We've got non-farm payroll on Friday. We continue to march closer and closer to what seems to be inevitable rate cuts for the September 18 meeting. We still have a lot of trends out there. Trends don't have to be in the same place that we saw them, say, earlier in the month or the week or even the year. And we still continue to have some trends forming around really more the Dow and the Russell narrative, not necessarily the NASDAQ and the S&P. But the question I get a lot of, let's just kick this off here as we start the show. The question I get a lot of, and I think the lesson to take away from the behavior of the NASDAQ and the S&P is, this looks a lot like April. It feels in some way a lot like April. And so the question is, do we recover like we did in April? And the question is, do we really think that there is not any further demand in 2024 for Magnificent Seven stocks? And I don't believe that's the case. It's just a matter of letting this month of July, its Aprilness, if you will, play itself out. And it's okay to wait. I think a lot of times the anxiety that comes up from a month like July or even a month like April is twofold. One, is it possible that the NASDAQ and S&P recover? I would say the same thing then as I will say now. Yes. And that's because the macroeconomic environment has not changed. So we have to let these things happen. And we also have to do the most important thing, which is refocus, right? We have to refocus. I don't know. Have you ever and I was thinking about this today. I was taking pictures of my dog on this thing, right? So I've got the cute little pup in the screen. And, a lot of you might know, depending on where you poke your finger on your iPhone screen to take a picture is where the focus can come and where the light will be focused on. So I'm telling the camera, hey, let's focus on this. And that's a lot like what we have to do as traders. We have to kind of poke at our brain. We don't want to poke ourselves in the eye. We're going to poke at our brain and say, look, this is what we want to focus on. Yeah, the other stuff can be out of focus. The other stuff can be not as lit, but we need to focus on where things are moving. And that's really where the Dow and the Russell should take our attention. And where our attention goes, obviously, that's where we'll build our watch list around it. That's where we'll look for opportunity without feeling the need to think we have to pick the bottom of this bearish chop in the NASDAQ or in the S&P. So it's really just a matter of saying, what is my number one job? My number one job. What do I optimize for? I optimize for trends. So the next thing is, well, what was trending is not necessarily trending now. And that's the hardest adjustment to make, especially when certain stocks and indices and sectors were so well performing for us the early part of the year. It's hard to let that go. Sometimes it's a FOMO. Sometimes it's the inability to just say, hey, where right now is it behaving like it did in the first half of the year? And if we have a process for that, and that's a watch list building process, focused around relative performance. My thought is we'll always be okay. We'll always have something to do. We'll keep our pipeline full with the best stuff, right? So as always, thank you so much for being here for Charts and Coffee. So let's get to it. I mentioned macro. All right, well, this is your macro decoder ring. This is the FOMC FedWatch tool. And the meeting that we have coming up day after tomorrow, Wednesday, it is largely discounted. It is massively discounted. We should expect to hold. This is not a cut meeting, right? Very little between now and then is going to change that. I don't, look, there's always the chance of 4.1%, but we are going to see a hold in July, the July 31 meeting. But really what we're excited about, what we're looking ahead to, the market's always looking ahead. We know this, is if we jump out to, hang on, my mouse is very twitchy today. Let's see, there we go. If we jump out to September 18, remember they take August off. Hardworking folks of the Federal Reserve take August off. And you'll see that it is fully discounted that we're going to get a quarter point cut, all right? 89.6%. You might think, Rog, Why is it not 100? Because the spillover, if you will, is going to take a peek. The possibility that we cut in July and in September, but it's a 4.1% expectation in July that we'll cut. It's only a 10.1 expectation that we'll get that second cut in September. Very unlikely. Possible? Sure. But probable 89.5%, 89.6% expectation we get the cut in September. So the macro has not changed. It's just been pushed further down the year. And that's really what we continue to deal with. We have plenty of things on the economic calendar this week. Not a ton, but plenty to look at. Today, pretty open calendar in terms of U.S. data. Going into tomorrow, consumer confidence and the JOLTS number. That's a big number. I'd say JOLTS is the second biggest employment number in the U.S. And of course, employment is the second mandate of the Federal Reserve. Wednesday, of course, FOMC. Yeah, there's some other stuff going on, but FOMC statement and press conference. Thursday, we roll into just our typical unemployment claims, ISM manufacturing that would fall more in that inflation metric, but not like PCE or CPI would. And then come Friday, boom, it's the big jobs number. So not a lot of data, but the big events that we have are really, really big. And then, of course, we're still going through earnings season. All right, so what do we got going on today? McDonald's, we got Merck tomorrow, Pfizer tomorrow, which puts the XLV absolutely in play. Those are two heavy-weighted names. We've got Procter & Gamble tomorrow, the number one weighted stock in consumer staples. PayPal, not as weighted and really not something I look at as much. It's moderately weighted. AMD is a heavily top 11 name in the semiconductors. Mondelez, Microsoft, that's a big one, gang. We know Microsoft is unique in that it has significant weighting in the Dow, the NASDAQ, and the S&P. It's heavily weighted in the XLK. So we know that that is going to be potentially a big market mover with Microsoft tomorrow. In fact, if I were to sort of rank the three big events for this week, number one is the FOMC, but that might be tied with the non-farm payroll this week in terms of important data. So I'll put the FOMC on top, followed by non-farm, followed by Microsoft earnings. And then we go into the rest of the week. Meta on Wednesday, Qualcomm on Wednesday, Apple on Thursday. Rog, why not Apple up there or even Amazon? The weighting is not the same. The weighting is simply not the same. Important, no doubt. High weighted, no doubt. So this is a huge week for tech, as you can see. Making our way down to Chevron and Exxon on Friday, which are the number one and number two stocks in the XLE. So if we're waiting to see if XLE can continue its climb, which benefits the Dow, those are more Dow-focused hot zones in terms of Chevron and Exxon earnings this week. And then, if we roll out into next week, the week after, if you're looking to set up rallies into earnings, roll out about 2 weeks. Roll out to about the second week of August, and that brings us to things like Home Depot, Cisco, Deere, Walmart, AMAT, Lowe's, Medtronic, etc. And there comes NVIDIA at the end of next month. So lots to look ahead to. If you're trying to set up earnings plays, don't do it the week of. Look for those trends 2, 4, 6 weeks before release and take advantage of the moves, the anticipation, the way in which traders position themselves in front of the big event. It's going to have a far better probability for follow through than that binary, are we right, are we wrong, implied volatility crush event that is earnings. All right, so that is what we've got coming up. Let's see what we've got going on intraday. Dow continues to trade above the previous session close, putting it in the bullish hemisphere today. Ditto the Russell, also in the bullish hemisphere by a lot. No, not by a lot, but it seems that we were likely open above Friday's close. NAS, same thing. We're trading above Friday's close. And the S&P. So as far as the four indices go, all of them are going to open anywhere from about 0.2 to 0.6 above Friday's close, putting them in the bullish hemisphere to kick off the morning, which means as a day trader, as long as we're above those lines in the sand, that previous session cash close, I'll be looking for buy day trade setups when we're in the mastery. By the way, what we do in the morning, and if you thought about, Rog, how would I arrange my trading life in terms of being a self-directed individual retail trader, how do I take my time and divvy it up so I can do different types of trading? And the way that we found works after a lot of testing is at the first hour of the day, while we'll always have an eye on the swing setups, I am going to focus on day trading the first 60 minutes of the day. After that, we transition to looking at swing trades, both short and long-term swings. So overnight exposure. One thing that the Lorna bot has found works really well around midday, and it really works any time of day, but midday, she's found a lot of success with scalping, a really short-term momentum day trade type approach. And then there's a fourth style that we do in the mastery, which is once a month and throughout the month. But once a month, we get together and we talk about our longer term position portfolio, our position trades that we're looking to hold for 6 months or greater. We have a pretty good sized portfolio of those types of trades, those positions using shares that we've built since, gosh, it's been about 2 years now. And that overall portfolio is up quite nicely. And so, I think that as an individual retail trader, I never want to pigeonhole myself into one style. I've done that before. I've done only swing trading. I've done only day trading. But I find that if I can use my hours wisely, give myself a midday break, it's very reasonable to tackle different time frames with different time horizons. And that's exactly what the Sector Secrets Mastery reflects in terms of our daily schedule. All right, so let's get to the questions. First up is SMH and NVDA. Those continue to suffer a little bit. I don't know that, we may. So the way I'm looking at right now, so again, the big question on Rag, where were we towards, let's look at April. April's going to be the best for this year. April's going to be the best example that we can compare July to. And by the 19th to 22nd in April, we started to bottom out. And here we are, the 24th, a little bit later than that, 24th, now the 26th, going into the 29th. Is there a good argument that the minor low has been put in? Well, I will tell you, we put a minor low in earlier this month, and then it followed through a little bit and then sunk. So I would keep an eye on the minor low, and I would especially keep an eye on stability in SMH above, say, 244, 243.80 to see if the lows based on a price pattern have been put in. And speaking of price patterns, we continue our summer school, our lessons through the end of summer in the Sector Secrets Mastery. And this week we have price patterns as one of our lessons that we'll be going through. What are those price patterns? Not chart patterns. If you don't know the difference between the two, definitely want to check out what we're going to be talking about. But price patterns and the pattern that we're seeing that got 3 out of 4 candles that I need to see has been put in place as of the 725 low. So it'll equally be important. It'll equally be important, Jody, that we stay above 230.80 if this is indeed going to be the bottoming pattern at the end of July that mimics much of what we saw at the end of, or towards the end of April. And then after that, all the different other names, whether that be NVIDIA or whatnot, should follow suit. So start with the bigger part of the food chain. In fact, to get a better read on SMH and NVIDIA, you really want to jump on over to the NASDAQ and see if that same pattern is happening. And indeed it is. So as long as we can stay above, say, 18,880, which is a 10% pullback, 18,885 was the 10% pullback from the highs at 20,983 and 3/4. And if that 10% pullback is going to hold, if that's where everyone woke up and said, wow, the NAS just pulled back 10%. Let's start building positions. That happened in the NAS futures at 18,885. So now the challenge is going to be, can we get above and stay above 19,390? That's not that far away. 100 NASDAQ points is not a big number. So if we can do that, the minor low will be completed. And that's what I'll be looking for, index sector stock, that alignment, understanding the food chain, if you will, the hierarchy of what could allow then, not just NVIDIA, Jody, but a lot of the other names within the NASDAQ, within the semis, within the XLK. Think about the implications of the NASDAQ putting in that 10% bottom. So we're not arbitrarily picking 18,885. That is a 10% pullback from the all-time highs. You can see it here in the labels on the screen. This is one of the many resources that we make available to Sector Secrets Mastery members. There's a number of free labels and free tools that we provide our members right when they join. So keep an eye on that, right? So it's syncing up. The pattern is happening in the right place after kind of a jolting, attention-grabbing 10% pullback in the NAS. All right. Next up, Kristen V asks, can CRM finally break out? So CRM is weighted in a number of places. And the most important thing for CM to do, as of Friday, it did close above the equator. That's the white dots across my screen. It did close above the equator. It's going to be super important that we continue to remain above, call it 258. And if you're looking at a minor low pattern, I would keep an eye on staying above basically 248.90. And the breakout occurred, the confirmation of the breakout, Christine V, happened through 256. So once we got above 256, that was confirmation of the breakout from a price pattern perspective. And we've had a couple of these breakouts. This will be the third one, but all of them have inched towards higher highs as a result of that pattern completing and also then, to your point, breaking out. So this time we've made it above the equator. And this is about as important a move as we're going to see before earnings on CRM. KRE is finally approaching its pre-bank carnage. Oh, gosh, great point. So, yes, we had that regional bank meltdown back in March of last year. Is it overextended? You know, here's the bottom line. I'll never know if something's overextended. Jay Moss, I don't think anybody does, right? At what point would we say a higher high is overextended and so forth? I would say that the most important thing is to remember, I don't want to engage any kind of trend at the highs. I want to engage them at a pullback to a predetermined spot of support. That support could be a volume support. That support could be a volatility support. It could even be a price-based support, but I would rather it be a volatility or volume-based support, because price alone doesn't necessarily tell us that there was a tension there in a meaningful way. Meaning at a price level usually means that a couple things are dovetailing: volatility, volume, and price. So while price is important, volume at price, volatility at price really gives it more meaning and likely more traction. So I don't know if it's overextended or not. I don't think anybody does, to be quite frank. However, I'm not going to buy at a high. I'm going to wait for a pullback, but it has made a heck of a move. This is true. Good thing to be cautious. Maybe expect a little bit larger a pullback, but the trend is in. And so that means that buying pullbacks is going to make sense. We buy the dip in a trend. We focus on that side. All right. Next up is GOLD. So from looking at Barrick Gold, potential mean reversion, but so on anything under, Anthony, anything under $20, I will recommend looking at volume over price. Anything under $20 is going to be more of a volume conversation. And if I take a look at July, this quarter, we're at the point of control for this quarter, Anthony. Yeah, we're absolutely at the point of control. What is the point of control for the quarter? That means I've looked back to the first trading day of the quarter, July, and then I've looked to see how much volume has traded at a specific price level. And you can see that's right there around 1780. Staying above that level, getting above that level will be key. There's a lot of attention concentrated there. So that's where the decision, that's where the battleground, if you will, is happening right now on Barrick. All right, gang, as always, thank you so much for being here for Charts and Coffee. I will see you tomorrow, same time, same station. Be good to each other, gang.